And welcome to Brain Wealth, where we explore timeless principles for building, preserving, and living with purpose through your wealth. Today's episode, it's kind of close to home for a lot of people, market volatility. Whether you're in your 40s stacking assets or you're retired and trying to make your money last, market swings can trigger fear. But volatility is not your enemy. It is a simple reality of investing. And here to talk to us about it and give us his thoughts and guide us through what has been a really interesting month of April, and who knows for how long in 2025, Bryan Repple. Bryan, how are you?
Hey, Bill, doing great. You're right. The month of April has been the key word volatile. And I think that volatility really will test people's sleep at night, their guts. And what I try to just tell people is it's always about, and we'll go through it in today's show, but it's the idea of, this really tests your emotional behavior.
Oh, yeah.
And we get to really challenge it. And so I'll share some stories about myself and clients and things that we're doing that will help navigate, because we're just in the month of April. This is, 1 month of 2025, and then we'll go out to 2026 and it'll be completely different. So we just had to have that perspective.
No, it's true. And I look, as you know, I spent several decades covering the markets, and I've seen a lot of volatility, but every time I see it, it doesn't keep me from having a little gut clench as well going into it. So why don't we start with, what's your first memory of feeling nervous about money, and how has that shaped the way you react to these markets ups and downs today?
Wow. Great question. So let me just kind of give a little bit of history. So my family's firm, G.A. Repple, my father started back in 1982. So it was 43 some years ago, we started this firm. And so as a kid, I've only been around the wealth management financial space. So I'm 49 now. I came in the business in 1997. And if you go back to the 1980s, when inflation was running wild, we had, in the 1980s, it was over 13% inflation. So just think about that. We were just 3 years ago in 2022, about 8 to 9% inflation, over 13% in the 1980s. And there was a Fed chair by the name of Paul Volcker, and they were really trying to cool inflation. So he took some aggressive action. And what he did back then was he raised what's called the federal funds rate. That's the borrowing rate. So that's like the interest rate of saying interest rates will be high or low. He raised it to nearly 20% to slow inflation.
I remember.
So interest rates spiked up. So that's like borrowing money in the high teens, 13, 15, 18% to borrow money. We were complaining that people were not borrowing at 2 to 3 when they had all the opportunity, or even at 0% interest rates. They wouldn't borrow money, but 30 years ago, 40 years ago, it was in the high teens. Yeah. So this caused a deep recession back in the 80s, and definitely market volatility, stock market, and it had an impact on my family. Because here we're in the wealth management space. My father was, and I was in middle school and high school during this period of time. And I just remember the challenges, the changes that we had to experience. So, and I have had to really go through a learning curve over when I came into business in 1997 and 1998. I was working with older individuals, people that were retired. And so here I'm in my early 20s. I had a language system of mindset of go, technology. And I had to really shift my own personal beliefs and how I saw money, because I experienced things in the 80s of, hey, markets go down and this is bad. I saw my family have to go through things. Fortunately, we had real estate. We navigated through it, but I had to really change my discovery, my behavior to serving clients and my own beliefs behind money. And so it's like, all right, I really had to work through that. Then I had to go through coming out of college in 2000, 2001, 2002, 3 negative market years, and really kind of saying, all right, how do we navigate clients, my own beliefs, their beliefs, and then you have the economy. And the real question clients are asking at different stages, but really in retirement is, do I have enough and will I be okay?
Yep.
That's the core question that they're really asking.
Yep.
So let me just kind of like say it this way: market volatility. You mentioned it in the lead off was whether you're in your 40s and accumulating assets or you're retired. The question is, it's trying to make your money last for you. Market swings, yes, they can trigger fear, but volatility is not the enemy. It's not the enemy. It's the reality of investing.
Yep.
So think of volatility. It's not a threat. It's a test. So it's that gut test, and how you respond to it determines whether your plan works for you, not against you. So we're going to unpack that here. So if you're in your 30s or 40s, or in your 50s, still working, listen up. Volatility is not a setback. It's an advantage if you're in that stage of life, because you can be dollar cost averaging. You're investing every month into these market cycles. Even when it feels uncomfortable, it can be your friend for the long term. So zoom out. Let's take a 10, 20, 30 year view perspective. The news today is not going to matter. Like the reason why I talked about the 80s, because the news of the 80s is not relevant today. What my family experienced and I went through in the late 90s, Tax Reform Act, high inflation, interest rates, that's not relevant today. It's a piece of history. We learn from it. We use it to study, but we got to zoom out where we are today and where you're going to be today, 20 or 30 years. And then I think the opportunity is you can rebalance smartly today. Use volatility as a chance to reposition assets to buy low. Now, this is not investment advice. These are strategies, concepts. Speak with a financial professional.
Yep.
But these are ideas of how you can position yourself. And so now if you're retired, yes, we have different strategies in place, and we'll get into that in today's show about how to navigate the different stages of life you're in.
Yeah. Yeah, in fairness, I've seen a lot of market. I covered the 1987 market crash. I covered the real estate, the savings and loan crisis in 1988. I saw the bad markets in the early 2000s. Then in 2008, we saw the Great Recession with craziness there. This is tough stuff, and it's scary because a lot of people, like you, for example. You come on in the early aughts, you've experienced it through your family, but you haven't really lived through this stuff like a lot of other people, including a lot of your clients have. But I would imagine that a lot of your clients right now are saying, hey, Bryan, the market's dropped 20%. So what do you say just in April? What are you saying? How are you giving confidence to stay the course? What do you do in terms of if you feel the urge to make a change?
Great question. So, I would say over 27 years, I've experienced a lot of market drops. Like I said, 2000, 2001, 2002, experienced that. A lot of people forget completely that because we grew out of that. 2008, as painful as that was, and that was a lost decade, that 10-year period in there. And then what we just had in 2022, when the markets went down in 2022, we were down as low as 27% just 3 years ago. Yeah. So the question is, if the market dropped tomorrow, we just experienced that. So I've had one specific client call up while the market was on its way down and said, Bryan, should we be more defensive now? And I'm like, well, I give the analogy of if you're taking your family on the road trip, you check the tires, you check your oil, you check the windows, you check all the things that are going to get your family to your final destination safely. Yep. You don't do it when the storm's coming. So we're in the storm. Now this individual is retired. And, and I always say, it's like, we're always going to have our future self. The future self in a year or 5 years from now needs you to stay calm. Stay consistent, even when it's very uncomfortable. If we're retired, if you're an individual retired, or you're in that stage of life, the plan and the strategy should already have been put together. It's not going defensive when the storm is hitting. So like for this individual, we are in the month of April. So when this gets published, you may hear it from a year from now. This is April 2025. And this individual saying, should we go more defensive? I said, no, let's look at the strategies we have already put in place. Because most people are taking income out from they're retired in that stage of life. They're pulling income out. This is the time to look inside the cockpit of your plane and say, what tools do we have available to say, all right, we're not going to pull out of assets that are in the market. Let's use our guardrail assets that are non-market related. These could be bonds. It could be cash. It can be where we have fixed index annuities, things that are non-market related. We want to use assets that are more safely positioned. So that gives our assets that are in the market time to heal, recover, to go through the volatility. And this is what's called the sequence of returns. That's a financial term. So what happens is in the sequence of returns, the sequence of return risk is when you're pulling money out from your portfolio during a downturn, during this volatility, it can drain your account faster. Just understand that. So this is why we don't react to saying when the storm's coming, you don't just necessarily have to keep doing what you're doing. This is when we pivot because we already have the strategy in place. And because of the sequence of return risk, we say, all right, let's look at those other assets that are non-market correlated. And we just change the strategy. So you don't have to live in fear. We can say, all right, we have this system in place. Now, if you don't have this in place, you need a better system. you need a better system. So when I was speaking to this individual and I said, all right, we've gone through the first month of April, distributions have come out. Let's stop those distributions on the portfolio side. Now we're going to start taking distributions from the asset non-correlated side. There was an annuity, there were fixed income instruments like bonds and cash. We're going to use those for the next 90 days into our fall meeting. So that way we can use our assets that are in the market to go through this chop without spending down in more of this downturn. Because we don't know, is it going to be short-lived or longer-lived? Right. But let's give it a runway we can work with of 6 months, maybe 90 days to 6 months, and we'll continue to navigate that. So this is kind of where a bucket strategy for retirees come in. Yeah. It's one, you want to have one bucket that's set up with some cash reserves or income producing assets. Bucket two with maybe safety assets, an annuity, or again, income producing assets. And you have your long-term. Yep. So when the markets recover, those long-term assets give it a chance to really grow without depleting them with this during this volatility.
No, that's interesting. Well, then you kind of answered this next question that's in my mind about, are you investing based on the headlines or based on a personal plan that's built around your goals and values? And it sounds very much like you're a plan guy.
Yeah, absolutely. You know, Bill, I've said this on the show, I say this to clients. Everybody loves yields and returns and making as much as possible. And they say, you know, one of the questions I was asked is, well, Bryan, should I be, looking at my risk tolerance as of today? Well, I said, well, do you think your risk tolerance has changed today based upon the markets being down than when it was up? I mean, if the market was going up, would your risk tolerance be different? Like, yeah, of course it would be. I mean, I want to keep growing. I want to make as much money. And of course I don't want to lose. Well, and this is why we have strategies in place before the storm. So the real question, that's the real question is, looking at this, are you reading the headlines? Are you focused on the news, or are we focused on you and your plan, your strategy? That's what wealth management, what we do, is always rooted in, is answering that question. Are you going to be okay? And can we navigate this storm and get you to the other side? And because what happened in the 80s, what happened in 2000, 2001, 2002, 2008, these were storms. Yes. They were moments in time. And because of that, we have to look out and say, all right, we will navigate through this. So yes, fear is very contagious. That's why the headlines are designed to keep you anxious and uncertain. I'm just going to say scripture, for God has not given a spirit of fear, but a power, love, and self-control. So your plan, when it's rooted in wisdom, it's rooted in strategy, we can navigate these storms and give you peace in the market so you can continue to live a life. When the storm hits, it's too late to build the shelter. So it's the storm's hitting. We don't go and build the shelter now. It's the idea is we want to go through it. We want to pivot and use the strategies that were put in place beforehand. So that's why working with us, Repple Wealth Group, we want to, if you're in the storm and you haven't done something, you're uncertain, we want to help you stay steady through this volatile time. And, there's definitely opportunities. Like what I said, the 30, 40, and 50-year-olds, these are opportunity times, dollar cost averaging, because you have new cash flow and is buying into these markets. The people, the individuals that are older, retiring or near retirement, we want to make sure that you're feeling peace of mind, sleep at night. Losing sleep's the worst for your health. And we want to make sure these plans are rooted in your values and your vision so we can get you to where you want to be in your future.
It sounds great. For anybody who's listening to this, Bryan, who wants to have a conversation with you about this, what's the best way for them to get a hold of you?
Yeah, so great. So if you're ready to experience, some peace and clarity, no matter what the market does, let's talk. You can reach out to our website at Repple, REPPLE, ReppleWealthGroup.com, or email me myself directly at Bryan, BRYAN, at GARepple.com. And, let's just sit down, have a conversation. It's important. This is about your money, your family's future, your health, and where you're going. And I will just say this, volatility is guaranteed. That's one of the guarantees. Volatility is guaranteed, but panic and fear is optional. So let us sit down and help bring some peace and clarity to your future.
That sounds great. The other thing you can do if you're listening to this podcast and you're not yet a subscriber is hit the follow button. Become a subscriber. That way, every time Bryan drops a new episode, like the next episode, you'll be notified and you can give it a listen as well. And I'm sure you won't want to miss what he has to say. If you like the podcast also, I would just ask that you rate it. Give it a good rating and tell people about it. Word of mouth promotion, very much appreciated by us, and we thank you for it in advance. Until the next time, I'm Bill Tucker. On behalf of Bryan and everybody at Repple Wealth, thank you for taking the time to listen today. And do remember this, in the spirit of this crazy times, you do have a choice. You can go out and make today a great day or not. The choice is always yours. Until next time.
Thank you for listening to Brain Wealth with Bryan Repple. Click the follow button to be notified when new episodes become available. Visit our website at www.repplewealthgroup.com. That's REPPLE wealthgroup.com. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of Bryan Repple. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning. Bryan Repple is a registered representative and investment advisor for G.A. Repple & Company, member of FINRA SIPC.